Hello everyone, today is Friday, August 29th, and we will continue to analyze the US stock market. Thank you for liking the video. This issue will follow up on fundamentals and then analyze the overall market index and popular stocks. The US GDP growth for the second quarter has been raised to 3.3, exceeding expectations and showing impressive performance. The annualized GDP growth rate for the second quarter of the United States has been revised to 3.3%. Higher than the initial value of 3.0, which is the market expectation of 3.1%. This strong data indicates that the U.S. economy has strong resilience and domestic demand remains stable, providing a positive signal for the annual economic trend and easing previous concerns about recession. Consumer spending continues to play a crucial role, with personal consumption spending contributing more to GDP, with the growth rate rising from 1.4% to 1.6%. This indicates that despite facing inflationary pressures and policy uncertainty, American households are still supporting economic growth. And the position of consumption as the largest driving force of the economy remains unchanged, demonstrating strong internal stability. Domestic demand indicators have significantly improved, with final sales to domestic private buyers rising to 1.9% per month, far higher than the previous 1.2%. This indicator is regarded by the Federal Reserve as a barometer of real demand, and its strong performance means an increase in domestic economic vitality, which helps to support future growth prospects and reduce dependence on external factors. The impact of tariffs is evident in trade data, as companies hoarded goods in advance to avoid the tariffs imposed on the Liberation Day, resulting in a significant drop of 29.8% in imports and dragging down GDP in the first quarter, while the decline in exports narrowed to 1.3%, contributing nearly 5 percentage points to imports and exports. This reflects that policy expectations have deeply influenced corporate behavior and distorted short-term trade data. Inflation pressure has eased, but the outlook is cautious. The core PCE remained stable at 2.5%, while the overall PCE slightly decreased to 2, approaching the Federal Reserve's target, although inflation has not rebounded. Economists warn that the subsequent effects of tariffs may increase, and future price growth may slow down to around 1.5%. We need to be wary of the combined effects of policy lag and external uncertainty, as Wall Street's bullish enthusiasm remains undiminished. NVIDIA's target price has been raised by an average of 3, and the performance outlook has not met expectations, but long-term confidence is stable. Although NVIDIA's revenue guidance for the current quarter is somewhat conservative, failing to meet some high expectations, the market is more focused on its long-term strategic layout. Analysts generally believe that short-term fluctuations do not change the growth trend, and the company's leadership position in the AI field remains unbreakable, with future potential worth looking forward to. Multiple institutions have raised their target prices, sending positive signals. After the release of the financial report, at least 10 institutions raised their 12-month target stock prices for NVIDIA, with an average target price of $202.6. Which has about 12% upside compared to the current price. This reflects Wall Street's high recognition of its technological advantages and market dominance. And bullish sentiment continues to heat up. The ramp-up of Blackwell chip production capacity has become a key driving force. Morgan Stanley and other institutions emphasize that the production capacity of Blackwell Series AI chips is steadily increasing, and the supply and demand are still in a state of excess orders. This strong demand indicates that the volume will continue to increase in the coming quarters, forming the core engine supporting stock price and performance growth. Small flaws in short-term guidance cannot hide the long-term brilliance. Although the revenue guidance was slightly lower than the buyer's expectations, analysts still consider it a temporary adjustment. Securities pointed out that the management has firm confidence in the long-term prospects and should not ignore the company's core role and continuous innovation capability in AI infrastructure construction due to short-term digital fluctuations. The prospects of the Chinese market still remain uncertain, despite the relaxation of some AI chip export restrictions by the United States. NVIDIA's sales in China have not yet shown a significant rebound, Analysts pointed out that the management is cautious about this, and the effectiveness of policy implementation remains to be observed. Whether the Chinese market can recover will become an important variable affecting its global growth map. Welcome to become a member. Don't miss out on stock analysis or bottom fishing videos. Remember to leave 2 words for reading. Let's take a look at today's market performance. The slight increase of 0.46% from Bitcoin to the closing session of the US stock market indicates that the long and short sides are still in a relatively divergent state. So today's bulls are only slightly stronger. Our daily lead is very long today, so if you see that the bulls here are quite strong, then the bulls here are not so strong. For the bulls, you need to be cautious. Of course, today is still the closing line, and we hope that the bulls' return will be stronger. Otherwise, there is suspicion of unwillingness to return. Let's take a look at the 15-minute chart. And we can see that the downward trend line in recent trading days is still valid. Today's bulls are slacking off here and have tested so many times, but they have not been able to go up. Fortunately, the trend line of our small bulls below is still valid. Therefore, the Eastern European sides are playing within a convergent range. In the next period, we will mainly focus on the bearish line breaking below or the bulls breaking through strongly and stopping the decline, which will determine the subsequent trend. You see, it is a volatile uptrend that can also become a reversal pattern or a volatile uptrend pattern, with both long and short positions almost evenly matched in strength. At the current position, you should choose to go long and place the stop loss below. When approaching the downtrend line, you should pay attention. If you can't go up, you still have to go short. Is the winning rate of going long at this position high? Not high, only a 50% win rate. Look at our closing, it's already closed, and this candlestick may not be able to close with a bullish candlestick. What if it falls? So everyone must pay attention, and there is another important point in the near future, which is the lowest point at the bottom. If it falls below, it will be troublesome and form a deeper retracement. Can this place determine whether it will rise or fall? It cannot be determined whether the market is rising or falling in this area. Both long and short sides are quite uncertain. Let's take a look at the daily chart again, which is a cross-star candlestick chart. The cross-star candlestick chart reflects a volatile market trend, indicating that both long and short sides have no idea and do not want to follow the trend. Let's take a look at gold, which closed up today. We can see that the daily line closed up 0.8, which is in line with the bullish expectation of a small rebound, which is a slight upward oscillation. Let's test these high resistance areas. Let's take a look at the 15-minute chart. We have drawn a bullish small band small trend line in the past 2 days, which is still valid and continues to be bullish. We will test the near 3,500 points ahead, and the recent high points are around 3,510 and 3,500 to see the selling pressure situation at that time. You can say that the recent trend of gold has returned to volatility, or you can say that it continues to move in a bull market. This gold target is quite complex, to be honest. Technically speaking, these 2 days are relatively simple. It's better to go long. Currently, the bears have not shown any strength, and the daily chart is basically going to test the high point. Okay, let's take a look at today's stock index and the performance of the US stock market. The Nasdaq closed up 0.56%, around 0.5, indicating that the market is trying to test these small resistance areas at high levels, to see if they are forming a head and shoulder top or continuing to rise. So a bullish trend may not necessarily lead to an increase in the future, but a bullish trend without strong momentum will definitely not result in an increase. A slight bullish trend is still advantageous for bulls. Why? Due to the recent bullish trend line, he did not choose to forcefully push down the market, but instead chose to slowly climb up. This indicates that the possibility of bullish returns is increasing. We look at the 15-minute chart and say it will definitely return. You see, bulls are very cautious about rubbing around this trend line. They can either return or not, right? I'm a bit inclined to return to this bullish position. But you see how subtle this position is. Like today's K, by the end of the trading day, he won't be here for long. It's frustrating. So he's at a critical position for you to guess. Anyway, he should make a rebound within the day to make a small long position. The overall stop loss of the long position can be raised to a higher level, therefore the long position still has a slight advantage for the time being. However, this pattern looks like a top, and it may or may not be based on the daily line or the judgment just now. If the short position gives him a chance, he won't want the long position and will slowly climb up. So the probability of returning to the long position is higher. If it really falls, then there's no way. This market is a dynamic game. You can't do it. Accurately predict the next candlestick. What kind of candlestick will it be? Line. We can't guess what's going on with the current feeling of the bears. Should they just go down here or take advantage of it? Some people say it can also form a head and shoulder top and then fall down. However, if a big bearish line hasn't formed yet, it's okay to take a look. Currently, I tend to look at the rise, and the head and shoulder top may not necessarily form and may become fake. There are many true, false, and fake forms in this world. However, for the bulls, you can increase the moving stop loss appropriately and not spit out all the profits. Don't think too much, you can't guess it, right? So our main focus is on the situation where the bearish counterattack is not strong enough. As long as the bearish counterattack is not strong enough. Do you think the probability of the US stock rising or falling is high? The probability of an increase is undoubtedly high. Let's take a look at other stock indices. Russell has shown a slight sideways oscillation and is still rising today, so let's feel the intraday chart. Stepping back on this support zone today is not a problem. Bulls can draw a small upward trend line in a local area, which is relatively healthy. It is not affected by NVIDIA, as you can see, stepping back. Afterwards, there were still signs of a halt to the decline in the afternoon session, so we continued to go long. Let's take a look at the daily chart again. It's okay, but are the bears strong? Not strong. Every time we have to ask, are bears strong? As long as it is not strong, the probability of the US stock market still rising is high. Big finger is also like a small bullish line across star line. Is bearish strong? Not strong. Let's take a look at the 15 minutes. His main reason is that he hasn't broken through the resistance zone recently. He's a bit volatile and going up. Let's draw a small bullish trend line, and it should not be too tight. It's just that the intraday chart is too tight, and sometimes it's just a random oscillation. Is the daily chart standard or that chart? The ups and downs have some random properties, so let's continue to go long. S&P hit a new historical high today without breaking our trend line, which is a positive signal. If there is such a sign, bears will not dare to move hard. Of course, this is judged based on the current situation. It's okay. Let's take a look at some popular targets. Let's take a look at CRUV. We said that if we go up today, we should buy at the bottom, right? After buying at the bottom, it will be safe. Look at this stock that has bought at the bottom. There is no absolute safety. He will fold down again, right? Then I used a 15-minute chart to set the stop loss. The ultimate stop loss is in this area. Some people say they won't sell until it's too late, but that's not what they say. Some people always like to judge the situation from an hindsight perspective. You should use the thinking logic of that time to review and see if it was correct. Yes, there's no problem. Is it important for CRUV to make or lose after the fact? We should go long. Let's take a look at the 15-minute chart. So today the bulls are very strong with the sky opening high and rising. We should buy at the bottom and go long, right? Today, including the videos we provided to our members in the past 2 days, they all mentioned that if there is no sign of a strong drop in the upward trend, it may still be an opportunity to buy at the bottom, but is it definitely safe? There is no absolute safety in this market. Everyone can raise their stop loss appropriately to follow suit, but the probability of stopping the decline is also quite high. Therefore, this place may become a sweep loss, panic, or sell-off situation where the climax is deliberately triggered. This is a post-event perspective, and you can judge this matter. If the market continues to fall, it will be embarrassing. This is a strong breakthrough by bears to break down, which is just a rebound and continue to fall. Therefore, the perspectives of the long and short sides of the market are different, and the interpretation is different. The bulls hope that it will return, mainly because it is a popular field and AI is powerful. Therefore, the bulls can raise their stop loss appropriately to avoid that the daily chart looks like that. If it's okay, the winning rate will increase. For bulls, after all, there are many sky heads hanging here and they are unwilling to continue attacking. Today, we need to mark the possible important support level around this area. It's easy to say there are all kinds of chaotic images, including various types of images. Let's take a look at Micron technology. It's been hanging for a few days. We said it's hanging for a few days, and he didn't fall below today's bullish line. After that, he must have been happy. He must have been anxious before and after this. It's not just one person, but time is changing. Things are changing, and people's emotions are also changing. If people's emotions are changing, they can just go bullish. So we can temporarily put this curve here. This adjustment is very standard. If he wants to fall, it will be troublesome. He will become at least a sideways trend, right? That's not it. Let's take a look at the performance during the day. It's okay. This small local pullback was broken through and stepped up, so the probability of resuming the upward trend is relatively high. The trend line we just saw is this trend line, but it is represented by a local line segment. The long line is drawn here, and we still use a straight line with a hook and loop to draw it. You will find that the new trend and the stop-loss point can still be drawn in the 115 area. Is short selling strong? Not strong. Shall we take a look at the strength of the daily bearish trend? Not strong. So, is this stock buying at the right time? Yes, right? Our bottom is relative to the future increase space. We don't know if it will rise or not, but it looks like it's going to rise. It's better to lean towards an upward trend, especially if there is a clear bullish candlestick that stops the decline earlier. Most likely, it will still rise. If it falls, stop loss. The probability of a decline is low, and we are only considering the possibility of reverse movement. However, overall, we are still looking towards a higher probability direction. Let's continue to look at the curve chart. After 2 days, if it still rebounds, we need to see if it can break through this horizontal area and break through this downward trend line. In other words, can the trend line of our local rebound extend upwards? Now is the simplest and most cautious expectation. Let's take a look at the bearish counterattack situation here. Bears don't have much strength. Bulls will try to break through this downward trend line, right? Probably around 255. Let's check if there are any signs of reversal within the day. If the signs of reversal are not strong, it will be a drop and the closing price will be small. Selling pressure may be due to insider traders leaving the market. If the bulls draw this trend line to follow up, the chart will be straightforward. Of course, it may rise. Why can't this be a double bottom? It may be a double bottom, but we should not blindly believe that those patterns can change. Let's take a look at PLTR and see if it's still a cross-star candlestick. Why isn't it strong? Everyone can feel that the bulls have fallen so much. Why isn't it so strong? This is not too important. The key is that the bears are not strong either. It is just a narrow sideways trend without any sense of trend, which can stop the decline or cause a sharp drop. Both long and short sides are not strong. The cross-star candlestick is a narrow sideways trend. So there is still some divergence in this position. It is possible that the bulls are a little hesitant, but some people say that these are all a combination. A direct candlestick with a long downward lead may be slightly advantageous for the bulls. We can also think that the bears cannot afford to stop or have a strong upward trend. With such a lost increase, the bears also believe that they have a chance. So we will observe again. Let's take a look at the 15-minute chart. It's a horizontal chart, right? This sideways trend, theoretically, we should go long. We should buy at the bottom and go long. This is not exactly a small downtrend line in this area. Why break through and retrace to stop the decline? Go long, but it doesn't look clear on the daily chart. The daily chart is a sideways trend with disorderly fluctuations, while the 15-minute chart shows that there are bulls entering today. So you should follow up and go long. The stop loss must be placed below. Can you go? Don't worry too much. Just do it when this structure appears. The stop loss is small, but if it rises, it will be large. If it falls, don't be surprised. This market is full of surprises. As I just said, there is also a chance for short positions on the daily chart. So the long stop loss can also be placed below the small horizontal chart in our 15-minute chart just now. Let's take a look at point 150. The limit position is 1 for 2, which cannot be effectively breached. 150 is a small stop-loss space in the near future, as today's intraday bulls entered here. Don't be surprised by the sideways trend. You can see a slight drop in this trend, but it's unlikely to fall. It's always difficult to judge sideways. Theoretically, we should try to buy at the bottom. Let's take a look at NVIDIA. Today, NVIDIA is a cross star with a bearish candlestick, indicating a serious divergence between long and short positions. Some people say that there are so many differences because the market value is too large. People think they are willing to buy a market value of hundreds of billions or trillions, while others say they are willing to buy both. The key is that the increase is not significant and there is not much profit. I don't know the specific direction of this number, but it is actually true or false. It is uncertain what level it will rise to. This chart, today's candlestick, indicates that there is a divergence between long and short positions. The bulls are slightly weaker, but it does not mean that the bears are strong or weak. Therefore, the overall market is still within this volatile trend. Let's take a look at the 15-minute chart, which is still shaking here. Why don't the bears exert their strength? I don't know why the bears haven't closed the solid bearish candlestick, right? At present, there are no bulls who only need to focus on this support zone and trend line. If there is no break, there is no need to completely exit. This is a daily fluctuation of gains and losses. If you see that its volatility is less than 1% at the end of the day, it indicates that it is very inactive. The transaction volume is 50 billion yuan, but this volatility is too small. That's just an estimate. All of them are individual traders on the computer end. What money do you make, right? Can't move around. Let's take a look at the daily chart. And then look at the daily chart to see if there is a possibility of breaking through beyond the line. Then you can get the big bearish line for me. So everyone should closely monitor the performance of this picture. Finally, let's take a look at Tesla today from a retracement perspective. Compared to these three bullish lines, the retracement of bears is not too strong, with the bearish line accounting for half. Let's take a look at the 15-minute chart, which is a retracement mainly aimed at reaching higher positions and giving some retracements. Is short selling strong? Not strong, not strong. So the bullish small band trend has not changed yet. I will record more content for members later. Please follow my channel and share daily content on US stocks, digital currencies, AI technology, and more. Everyone is welcome to watch, and thank you for liking. See you tomorrow.